Hello, welcome back to Mining Network. I'm joined again with Jose Vizqueras, the CEO of O3 Mining. Jose, we haven't seen each other since September in Beaver Creek, right?
Correct. Yeah, great to see you again.
Good to see you. Tell us what's been happening since then.
Well, we published our pre-feasibility study, which was a major milestone where we were showing a net present value of $463 million at $1,700 per ounce gold, 5% discount rate. Very interesting the fact that now, a couple of months after, we have a $2,000 per ounce gold, which takes us to over $700 million net present value. And that's a major thing for us because our market cap is $100 million.
Yeah, so even on an MPV, I guess discounted, you're what, about 1/7 of your current MPV.
Correct.
So, since we last spoke, I mean, there's been quite a lot of activity going on in the region around you, and I think this changes things fairly substantially in terms of, I guess, the strategic location of Marban and your licenses. But could you just give us an update as to what's been going on regionally around you, around the licenses?
So what you want me to talk is about what's going on with the major companies around us.
Exactly.
Okay.
Yeah.
So around major companies, Canadian Malartic used to be a 50-50 joint venture between Agnico and Yamana. Recently, and it is public, Agnico has taken over Yamana after Goldfields tried to take over Yamana. Agnico came on the top together with Pan American Silver, and now it's the sole owner of Canadian Malartic, a mine that was built in the early 2000s, began production by 2011, I believe, and certainly one of the largest facilities that are in the region, and certainly they have been very open, saying that they want to consolidate.
Okay, so obviously they've got an operating mill at the moment, which just how far away is that? What's the capacity of the mill? What I'm basically trying to get to is there capacity for you, instead of O3 essentially building a capex or sort of raising capex and going through that process of building your own plant? Is there potentially a route that you could see where you could actually use existing infrastructure nearby?
The project that we have on our pre-feasibility study is as a standalone project.
Yeah.
Canadian Malartic, based on what they have published, they have a 55,000 ton per day plant. It seems that starting in 2027, maybe 2028, they will need to bring ore from somewhere else. And certainly, why not? We could be an option, but of course, we don't control that, right?
Yeah. Okay, let's park that because obviously that's uncontrollable. What's the next steps for you to de-risk the project and essentially get more value from this?
Well, I think the best way for us to monetize or to increase value is by adding more resources. And now we're going to go to the theory that for a second, we're not going to be dealing about O3, but how do you build value? And that is by extending the time of a project. And when you have the discounted free cash flow, you do the net present value, which means that you incorporate interest rate, you pass everything to the present. So if you have only 10 years, you are converting 10 years to today. If you have 12 years, then it's more. 14 years is more. And the reality is that the academia says that after 15 years really doesn't impact as much the cash flow. So what is our focus is focusing on what we don't have. We don't have anything from year 10 forward. So that's what we have to fill the gap. And that's our focus right now.
Okay, and just remind us the amount of ounces in the ground at Marban.
We have a total of 2.6 million ounces in resources, total resources. And in terms of proven and probable reserves, which is what we have in our preliminary feasibility study, we have 1.6 million ounces in reserves.
Okay, at what grade?
After diluted, almost like 0.9.
Okay.
So around 0.9.
Oh no, right. What's the strategy in terms of adding these additional ounces and increasing the life of mine? Is this at depth at Marban? Is it along strike? Is it potentially
Great.
satellite deposits nearby?
Very good question. So our job as management is to add the most amount of value in the immediate future.
Right.
So we're not focusing at any time in drilling very deep,
Good.
although we know it continues. We're not focusing there. We're focusing every single ounce that can be found close to surface in the first 300 meters, where we have these three major structures going northwest. In the case of Marban, where we have Marban, then we have Nolartic, we have Kirens, now we have Malartic H, Malartic High Grade, the area where we are right now working on a new resource. And then we'll continue to drill in that same trend. Our expectation is that that trend continues to be mineralized. What is the certainty of that? Only God knows, but we will continue to do the work in any case.
How are you going about the work? Because like you're saying, only God knows at this point. Is there some low cost work you can do to try and make sure it is there, or is this really you need to put the drill rigs in and
no, we
just
have
find
to
out?
put the drill rigs.
Yeah.
There has been some drilling there, so there is some indications, but we have to do the job. No.
Okay, fine. Talk us through the next 12 months. I mean, where do you see the company in 12 months' time if all things go well? What is the best case scenario?
Well, we will have a new resource by June. We will continue to do exploration in the surroundings of Marban, and we will continue to be working on the retoning the engineering to see if there is any other places where we can reduce cost, not only on the capital expenditure side of things, but on the operational side of things.
Okay.
And that's where we're going to be focusing for the next couple of months.
Okay, and what about on the metallurgy side of things? How coarse of grind do you need? What sort of recovery rates?
Metallurgy has not been an issue so far.
Okay.
We've been recovering very well in the case of Marban. So that has not been an issue, but we continue to do some more work, but it's not vital work that could have any negative side, if I may say.
Okay.
Everything looks very promising in that regard.
Okay. I just for me because we've spoken quite a lot of times, and every time we speak, I just can't get my head around this value disconnect of sort of what you have in equity and sort of I guess in cash and equivalents compared to the market cap. I mean the amount of ounces in the ground compared to the value of those ounces versus. I mean, what do you think is the catalyst really for I guess a revaluation or not even a revaluation, just a catalyst that you think might be upcoming? Is there anything that you think could change the fundamentals and change the way investors look at this project?
So two things. One, exogen, and then and another one that it is internal. Internally, if we keep adding resources, eventually people will realize that this is continue to add value. And externally, we have seen lately that with the increase of gold price, we have seen investors that now are finally dripping from investing in royalty companies, in producers, now in intermediate, and finally money's coming down to the developers, which is ourselves. We have seen an increase in our share price, maybe due to that. I do believe that we need gold to stay at these levels for at least another 3 weeks or so.
Yeah, agreed.
And then maybe people will have the will to come back or the bravery to come back into gold. And yet, we as the new generation, in a sense, although we're not that young, we need to change the narrative in the gold industry to allow younger people to come into our industry. The problem that we are having right now is that the pool of capital is restricted. It's too small right now.
Yeah.
It used to be much bigger. It has gone away, and has not come back. We need to bring more retail. We need to bring more generalists. We need to bring more youth into the industry. We need to change the narrative of the gold industry in general.
No, agreed. And I think you are right in terms of the next 3 weeks. It's especially what we're hearing in London is people aren't 100% sure what's going to happen to the gold price. Is it here to stay at around the $2,000 mark? I think a few
Correct.
more weeks would create some more certainty. You're right.
Yeah.
From my point of view, and the way I've been looking at it, obviously, as you know, I've been following the story for quite a while now. You've got incredible infrastructure around you. You've got potential partners. They're not your partners now, and I'm not saying they will be or they are, but with Agnico, with an operating mill nearby, obviously looking by a certain date, they will need more feedstock. I guess from the way I look at it, it seems not inevitable but probable that a route for O3 mining could be that you could really do toll milling, because obviously the CFO of Agnico has publicly come out in the past as well and said that he's open to toll milling.
Certainly. Certainly.
But really, if that is a route for you, this reduces your capex potentially by what, around 200 million.
Yeah, I mean, if you take our pre-feasibility study and you do a quick calculation on crossing the different infrastructures, yeah, you cross the mill for 160 and you cross the tailings for $50 million, you're certainly reducing in the order of $200 million, which will add a lot of value to our shareholders.
Yeah, well, it slashes your capex in half while keeping the NPV pretty solid, right? So I think this is the real good thing about O3 and Marban and the project is you've got a lot of that optionality. You can either go through this yourselves and build it as a standalone project, or you can leverage off the infrastructure already nearby. And with the way that Quebec's set up in terms of flow through funding and everything else that you have around you, I think you're probably sitting in a very unique position.
We believe we are. Yes, you're absolutely right. We do believe that we have a lot of flexibility at the very minimum.
Yeah.
So definitely we believe that this is a standalone project, but as you alluded to it, there are synergies that if they come into place could add even more value from where we are right now. No?
Okay. Just to end things as well. I mean, you're currently per ounce in the ground. What are you sort of trading at in terms of value of ounces in the ground compared to
If
your
you
market cap?
take it all and divide it by the market cap, it's around $17.
$17 per ounce. And what about just the pit constrained resources at the moment?
I think it's around $50 per ounce.
Okay. But if you look at your market cap instead of your actual market capitalization, but your enterprise value, because you minus the 50 million that you hold in cash, I mean, it's probably more around $25, would you say,
Yes.
compared to?
Correct.
So really, I mean, again, I know it's hard for you to comment on some of these things, but when you look at transactions from companies like Agnico or others where they have even bought other companies, it usually is at least $100 per ounce. And I think there's a big disparity there between your current valuation and what it could go to should the neighbors around you actually need to acquire more, which sounds like it could be a possibility. But again, I know
that's a banker's job. Our job as mining people is just to think about the project, having the best outcome out of the project, which means to maximize value on free cash flow. That means reducing the capex as much as we can and reducing operational cost.
Yeah.
And that's our focus. And as explorers, it is certainly to keep finding ounces. No.
Brilliant. Well, Jose, thank you for your time.
Thank you so much. Appreciate
Brilliant.
your time.